And shifting to China, Paul, the country's inflation rate has hit its lowest point in 5 years, raising expectations that Beijing might inject further stimulus into the slowing economy. What are some of the consequences of this sharp decline?
Well, the biggest impact we'll likely see is lower import prices coming out of China, which have a wide-ranging influence on the price of goods around the world. But within China, it's going to make it harder for companies to service their debts, which in turn will put pressure on the central bank to extend its monetary easing policies. The National Bureau of Statistics said Wednesday that China's consumer prices grew 1.4% in November compared to the same period a year earlier, climbing at the slowest pace since 2009. This as the producer price index recorded its 33rd straight monthly decline, marking the biggest fall since last year.
The CPI growth has been maintained between 1 and 2 percentage points for 3 consecutive months. The producer price index has kept negative growth for more than 30 months. This indicates a potential deflation risk for the economy. In addition to dropping of the purchase management index in past months, it proves that our macroeconomy is still under downward pressure.
The report also showed China's inflation index grew at an annual rate of 2% in the first 11 months of this year, well below the government's target. It says economic growth fell to a 5-year low this past quarter at 7.3% on year.